want to start in Europe because the euro has really quietly been climbing. It's up about 15% since its lows in 2012. Does the euro continue its climb this year?
We certainly think so. I think the euro is one of the most misunderstood currencies. People think that the Europeans have printed a great deal of money. Quite the opposite has been happening. Banks are returning the liquidity. And what's been driving the growth in the Eurozone, if anything, the stimulus, is the lowering spreads, the lower cost of borrowing in these weaker countries. So the European Central Bank doesn't have to lower any benchmark rates for there to be a stimulus. At the same time, Draghi, the head of the European Central Bank, has been very frustrated the euro isn't any weaker. But there isn't much he can do, especially in contrast to what's happening at the Fed.
I want to go there next in terms of the U.S. dollar. Really, if we are in an environment where interest rates are going to be rising, albeit slowly, but still rising, is there any reason for us to think the dollar is going to rise? Usually that's not what happens.
It certainly is not what happens, despite the common perception. And what people always think is that should be good for the dollar, but foreigners own a lot of treasuries. Well, as interest rates rise, the bond market turns into a bear market, and as such, foreigners have less of an incentive to buy treasuries. It's in the late phases of a tightening cycle that the dollar tends to benefit. So there are tons of myths out there in the currency world. And of course, as an investor, there are opportunities. You can take advantage of some of these myths, but it's of course very frustrating. Everybody says, oh, the dollar has to go up. Last year, the euro was the best performing major currency. The year before, with all the trouble in the Eurozone, the euro beat the greenback as well. So this cleanest of the dirty shirts that we have in the US doesn't mean the greenback is always going to do so great.
So does that mean go long euro, short US dollar?
Well, that's what we have been doing quite a bit in our mutual funds, because you just you don't want to go with the trend with the masses that say that, oh, because we have this exit, because we have this, because we have that exit at the Fed, we cannot have a proper exit because we cannot afford positive real interest rates. The biggest threat we see in the world economy is the policies are working. What's going to happen to bond yields in Japan if they get economic growth? In the US, similarly, how are we going to finance our deficit in 10 years from now? We have a bias against positive real rates, and those things, depending on the culture in different countries, will play out differently, but the Federal Reserve will, in our view anyway, do exactly what they've promised, be very late in raising rates.